Hi, we are from Group E. We want to present about understanding income, taxation principle and implication. My name is Tan Pei-Wen. Number matric is 297918. Now, let's begin with the introduction. Income tax can be explained as the amount of money that individual and business are required to pay to the government based on the income or profit they earn in 1 year. Now, let's move on. Importance of income tax. The main purpose of income tax is to establish a stable and dependable income stream for the government. The government can allocate this revenue in order to implement its operation, including providing public service such as healthcare, education, infrastructure, social welfare, and security. Without income tax, the government would lack the required funds to maintain essential service and enhance national development. For instance, in Malaysia, income tax money helps pay for income tax service like healthcare at public hospitals such as Hospital Besar, ROSLI, and education at public university like University Utara Malaysia. According to the Ministry of Finance Malaysia, income tax collected from people and business make up more than half of the federal government total revenue. This clearly shows how important income tax runs the government and support the well-being of the people. This way, income tax plays a role in creating more equal society by helping to redistribute wealth. It becomes especially crucial during tough economic times. For example, during the COVID-19, the government relied on tax revenue to support stimulus package, health care costs, and wage subsidy. The income tax collected in earlier years made it possible to deliver financial assistance to family and business when they need it most. In conclusion, income tax is not just a financial obligation that are required to pay. It is a part of building the country and treating fairness. On the other hand, it supplies the government with the funds needed to develop and sustain the nation, while also making sure that everyone contributes based on what they can afford. Next, I want to talk about classification of taxation. There are 3 taxation, which is tax technique, number 2 is tax base, and number 3 is tax rate structure. Tax technique refers to how tax are collected. Generally, tax are collected through 2 main techniques, which are direct and indirect taxation. A direct tax is one that is paid directly by the taxpayer to the government, and the tax liability cannot be transferred to another party. Income tax is a prime example of a direct tax. In Malaysia, individual taxpayers submit their annual tax return to the Inland Revenue Board, declaring their total income and determine the amount payable. The tax is either taken from their salary through monthly deduction or paid directly by the taxpayer under the self-assessment system. This approach ensures a clear and transparent relationship between the taxpayer and the tax authority. Indirect tax are those collected by a middle person, such as a seller or retailer, from the final consumer who actually pays the tax. For example, sales tax, service tax, and excise duties. For example, when a person buys a drink at a restaurant, the price they pay includes service tax. The cafe owner collects this tax and then submits it to the government. However, the tax cost is ultimately paid by the consumer, not the business. Number 2 is tax base. The tax base represents the total value upon which tax are levied. Each type of tax has a different base. In the case of income tax, the base is the total income earned by an individual or a business over the course of a year. This includes wages, business income, rental earnings, and other forms of revenue. However, not all income is taxed equally. Most tax systems also contain a wide variety of deduction, exemption, and relief that will effectively lower the taxable amount. In Malaysia, individuals are entitled to personal rebates for expenses such as education fees, insurance contribution, medical costs, and child expense. This helps ensure that the tax base accurately represents the taxpayer's actual capacity to pay. Third is the tax rate structure. The tax rate structure decides how much tax someone has to pay depending on the value of the tax. There are three main tax structures which are progressive, proportional, and regressive. A progressive tax rate means that while an individual income increases, the rate of tax they have to pay also increases. In this system, individuals who earn more must pay a more percentage of their income in tax. A proportional tax rate imposes an equal rate on every taxpayer without considering income level. Although this system is straightforward, it does not take into account disparity in a financial ability. For example, if a teacher earning 2,500 per month and a CEO earning 20,000 per month are both taxed at a rate of 10%, the financial impact is more significant for the teacher despite the equal rate. A regressive tax rate places a heavy burden on lower income earners. This is because it takes a larger share of their income compared to those with higher earnings. In addition, this usually happens with some consumption tax like sales tax, where the amount paid is the same for all individuals without considering of income. Therefore, the financial impact of taxation is heavier on the poor. Critics maintain that a regressive tax system increases economic inequality. An example of regressive effect in Malaysia can be seen through the implementation of blanket fuel subsidy. Although these subsidies are intended to benefit all citizens equally, they tend to favor the wealthy more significantly, as higher income individuals usually own more vehicles and consume more fuel.
There are various principles that are practiced in the principle of tax. Equity is one of the most important principles of taxation. It involves fairness in the distribution of the tax burden. This is the vision of equity, namely horizontal equity and vertical equity, which can be applied in the taxation principle to be considered. Horizontal equity explains that individuals with the same ability to pay should owe the same amount in tax. For example, if two individuals earn the same income, they should pay the same amount of tax. Vertical equity suggests that individuals with a greater ability to pay should contribute a larger amount. This can be clearly seen and often implemented through a progressive tax system where tax rate increase with income. Equity is very important, especially in tax payment, because it can uphold social justice through tax collection. It can help with income inequality by redistributing wealth. Equity increase the people's trust in the government. If the government efficiency manage tax resource, the people will be satisfied and comply with the tax regulation because there is a fair tax system. Next is effectiveness can also stimulate the country economic growth. This situation can be strange with incentive or well-designed tax policies that can attract other investors into the Malaysian market. This situation will strengthen economic development in various service sectors. Effectiveness is also able to foster equity and justice. The implementation of tax imposed on a high-income individual and the provision of subsidies to low-income groups can narrow the income gap and support vulnerable population. For example, a practice in Malaysia that can improve the effectiveness of tax policy is in terms of regionalisation of subsidies. The government has also cut these subsidies. According to the Awani online newspaper in 2023, the government will spend a total of RM81 billion on subsidies for electricity, petrol and diesel supplies as well as various food supplies. Next is flexibility. Flexibility means the ability to be easily modified. In the context of taxation, flexibility can be defined as the ability of a currency exchange rate system to adapt to changing economic conditions and pressure. Important of flexibility in tax policy is to be able to achieve a responsive economy and a flexible tax policy help the government to structure tax rates in response to economic fluctuations such as during the economic recession or during economic expansion. The flexibility found in this tax will ensure fiscal stability. In addition, this principle of flexibility can also increase innovation and investment into the country. In the context of economic growth, tax collection can provide positive benefits such as tax collected being used for national expenditure and administrations. For example, in public development projects such as schools, universities, hospitals, health clinics, and so on are also used by the government to maintain the country economic growth, especially if there is an economic slowdown by injecting financial funds into the country economy. In addition, tax are also a tool for redistributing income and wealth indirectly to those who need it. Tax are also used to ease the ease the burden of the people living expense through subsidized assistance of essential goods such as oil and basic foodstuff. Next, the implication of income tax on government revenue are that it greatly helps in the growth of the country's economy. This is said to be so because taxes are a source of income by the government for the main financing of the federal government. Imposing income tax on an individual is that the main way for the government to increase the revenue needed to finance government spending on goods and services needed by the people. For example, income tax financed by taxpayers in Malaysia is used to finance the constructions and maintenance of public infrastructure such as road, bridge, and airport. This is allow the people to easily access basic service and enjoy good transportation facilities. Income tax has significant implications for the economy, including the impact on economic growth, employment, and income distribution. Lower tax rates can stimulate economic activity by increasing after-tax returns. However, higher tax rates can discourage investment and reduce the overall size of the economy. Tax policy can also influence economic conditions, which can potentially affect economic growth through various channels. The economic situation in Malaysia in 2024 is expected to expand despite facing various headwinds such as continued tight monetary policy and the end of physical support, which is expected to be offset by several supporting factors such as continued low inflation, a resilient labour market, and a recovery in global trade. Next, implication of income tax to social welfare are in the redistribution of income. This has a positive effect when progressive tax are implemented. This progressive tax can reduce income inequality. This is because tax will only be imposed on those with high income at a higher rate. Therefore, social welfare is whether the government use the revenue to fund public service and welfare programs. For example, the government can use the revenue to develop the health sector such as improving infrastructure, repairing dilapidated government building structure, upgrading school, and many more. In addition, the impact of income tax on social welfare is this redistribution help in increasing low-income households and promoting a more equitable society and improving overall social well-being by ensuring that basic needs are met for more people. Lastly, tax policy affect economic decision-making on work, saving, interstate migration, investment, and business organizations. First, impact on individual or employee and investor. The tax implication for individual will affect the high-income group known as the T20 group in Malaysia. For example, in Malaysia, starting from the year of assessment 2025, dividends income exceeding RM100,000 is taxed at 2%. Next, impact on company and employees. Tax implication can increase compliance costs and audit risk. This is because a company is forced to comply with strict regulation and guidelines. This situation causes tax audit risk, which can increase operating costs.
Next, I will continue with the comparison between tax avoidance and tax evasion. The first one is tax avoidance. Tax avoidance is legal methods used by a taxpayer to minimize the amount of income tax owed. Meanwhile, the tax evasion is an illegal practice where a person or entity intentionally does not pay due taxes. For example, in the United States, a nation with one of the highest income tax in the world, complaints with taxation and collection are done by the International Revenue Service, IRS. The IRS uses advanced digital platforms, data analytics, and third-party reporting to trace and track income, making it difficult for individuals or any organization to hide taxable income. The international compliance is achieved by America through legislation like Foreign Account Tax Complaints Act, FATCA, requiring foreign financial institutions to identify U.S. citizen account. Next, in Indonesia, tax collection runs within the purview of the Directorate General of Taxes, but encounters regular voluntary non-compliance by small and medium enterprise. Encounters regular voluntary non-compliance by small and medium enterprise, whereas Indonesia endeavor to update taxation in terms of e-filing, invoicing, and internet payments collection trails behind the complexity of its real economy. Impact on government revenue and service. Domestic avoidance of tax by large corporations and wealthy individuals decrease possible tax revenues otherwise going to the government. Even while in the US, remains collecting substantial revenue from taxes, abuse of legitimate loopholes, in addition to cross-border avoidance strategies translate to billions each year in lost revenue. This has caused grievance of the taxation system being discriminatory against poor taxpayers, leading to loss in terms of equity wealth, subjecting middle and lower class taxpayers to a heavier share of burdens. Tax avoidance by corporation also accounts for negative perception in society against major corporates, with them being seen not to contribute enough while they grip government to provide infrastructure, judicial system, and consumer market. Despite this challenge, the US government possesses a relative sound ability to finance government service due to a large taxpayer base and a diversified economy. It pays for services like Social Security, Medicare, education, defense, and infrastructure development from income, payroll, and business taxes. However, when erosion decreases the pool of revenue, the consequence can be lessened, government spending or increased national debt. In addition, fairness and reform controversies remain, and policymakers have proposed policies like global minimum tax rates, tighter foreign earnings control, and more openness to create a more equitable allocation of burdens. For Indonesia, evasion is a serious problem. A large portion of economic activity remains out of the formal economy. The inability to tax taxpayer and business, particularly in the shadow economy, creates a vast deficit of potential revenue relative to revenue collected. The resulting revenue gap limits the government's ability to finance core services such as health, education, and infrastructure, particularly in rural and underdeveloped regions. Poor enforcement and a lack of information on taxpayer complicates the task of the taxing authority to identify and punish evaders, and the problem has to a tendency spill over to a spectrum of sector of the economy. Furthermore, the lack of sufficient revenue has long-term consequence for Indonesia development aspiration. Under-resourced system of healthcare are not able to guarantee adequate coverage, and public education system frequently fall short of needed material and qualified teachers. Implementing public infrastructure, a key drive of economic development, is consistently delayed or curtailed by budget constraints. To overcome this challenge, Indonesia continues to undertake reforms that widen the tax base, increase compliance, and support the credibility of its tax authority, but the journey is challenging.
My name is SOFRINA and my metric number is 298574. And the conclusion is, in conclusion, the income tax plays an important role in the development of a country from various aspects. From an economic perspective, income tax is the main source of government revenue to finance public services, infrastructure development, and stimulate sustainable economic growth. A fair and progressive tax system helps reduce the income gap and support inclusive development. With a stable revenue stream from income tax, the government will face financial constraints that could jeopardize the continuity of basic services to the people. Furthermore, the income tax functions as an economic control through the implementation of progressive tax rates, tax incentives, and exemption policies that can stimulate strategic economic activities and reduce income inequality between the rich and the poor. So the next part is from the aspect of national administrations and policy. The implementation of efficient and fair income tax system requires a consistent fiscal policy, effective enforcement, and the use of technology in monitoring and processing information. Challenges such as tax evasion and the shadow economy and cross-border income require effective policy reforms and international collaboration. Moreover, the tax administration needs to ensure fairness in implementation when all the taxpayers are treated fairly without burdensome bureaucracy. The improvement of the efficiency of tax agencies and the use of digital systems such as e-filing and e-payment and big data analytics are able to enhance the compliance and decrease the revenue leakage.